Welcome back to Live at 5. It's time now to be joined by our weekly expert from Edward Jones. And today we've got Mark Matthews joining us. Hi there, Mark. How are you?
I'm fine, Alan. Good afternoon.
Love the Chiefs tie.
Well, thank you. Yeah, I wear it about once a year, and today's the day.
It is all the rage today. We are talking savings and investments today and keeping an eye on the stock market. Now, the last couple of years, folks watching their 401ks probably saw anywhere between a 10 to 15% increase the last couple of years.
Yep.
You can't bank on that every year, can you?
Well, that's exactly right. You know, we've had 3 years of double-digit market growth, which is great. And at some point, you have to expect to take a breather from that for a variety of reasons. And in this case, we kind of think that the economic reopening that we had last year, now we're waiting for kind of another reopening coming back from the next version of COVID and so forth. And that's going to be with fits and spurts. Last year, corporate earnings rebounded much more than was expected. And so this year, we still expect some earnings growth, but not nearly as much, probably upper single digits instead of 35 or 45%. So, a big difference there. And, we had supportive fiscal policy, government spending. And right now it would appear that corporate tax hikes are off the table, and that would be a supportive thing for the markets and for investors. That remains to be seen what Congress does, from time to time. So I won't guess on that, but right now that's not too bad of a look. But what will kind of create bumpiness, and we've had some in the last several days.
Some of those things that you're mentioning there are for what we pay experts like you to watch every day, and for us just to look at our percentages go up every week or so. But so far, the last couple of weeks, I know it's a short window, there's been a slight downturn for a couple of weeks since the start of the year.
There's been some volatility, and part of that is some of the reasons that we're going to talk about that could give us some bumpiness is inflation. That's been the news a lot, and the prospect of inflation is something we don't want to experience. So to fight that, the Federal Reserve is looking at raising interest rates several times, and then that causes borrowing costs to go up. And so that's the reason for some of this concern or market volatility is inflation being higher, warranting higher interest rates, and then of course the supply chain problem that we've heard about for quite a few months. That should, I think, abate as the year progresses and supply chains won't be quite as stretched so thin. People won't be sick all the time from Omicron and so forth and be able to work more. We'll have to wait and see how that plays out, but I expect that to be the case. And the prospect of rising interest rates from central banks around the world. All this means is that the last couple 3 years, even with COVID, we had a smooth ride going up. And this year, that won't be we won't have that this year. It's going to be bouncing around. I think at the end of the year, there'll be more good than not, but people have to recognize that volatility is really the norm. And last year was abnormal in its low volatile performance.
Well, all you experts always say, look at the long term instead of the short term. And so we're seeing these little blips right now. I don't think we should all go to our 401ks and panic and hit the button on them.
Oh, no.
You preach long term. And so how can folks get some more advice from you all at Edward Jones?
Great question. They can start by going to edwardjones.com and look for St. Joseph, Missouri, or one of our zip codes. And you'll find our offices dotted around town. And that's the best, quickest way to find someone that's in your area or someone you might know to talk in more detail about what's going on and what you might want to do.
All right. Well, those 10, 15% increases every year would be super if it lasted forever, but it never does, unfortunately. Mark Matthews from Edward Jones, thanks for joining us today.
Thank you, Alan.
You bet. All right. And stay with us. We've got more Live at 5 for you after the break.